Why currencies have different values? Why is it that $1 can buy you a burger in America, but in Japan, the same dollar turns into 150 yen? And suddenly you're rich enough to buy a small meal and a drink, and then a $100 bill in Zimbabwe barely buys you a loaf of bread. Hold up, who decided this? Why is money's value so uneven around the world? By the end of this video, you will know exactly why your country's money is worth more or less than someone else's, how politics and even history play a role in it, and the surprising real-life events that made some countries stupid rich. This is Decoding IQ, where you make money, finance and economy so simple that even your 5-year-old cousin could flex at the dinner table. Let's dive in. Well, the first question that might come to your mind is, who decides how much a currency is worth? Well, there's no single person. Instead, the value of a currency is decided in a giant, invisible marketplace called the foreign exchange market, or forex. I'm sure you heard of this term before, but you might don't know what it is or how it works. Well, here how it works. Imagine the world's currencies are like stocks. People buy and sell them 24/7. If a lot of people want a currency, its value goes up. If nobody wants it, it goes down. Example, in 2022, the US dollar became stronger than most currencies because investors thought the American economy was safer during the global chaos like Russia-Ukraine war and the global trade situation. So naturally demand went up, and so did the dollar's value. But here's the plot twist. It's not just about the demand. There are mainly three big factors. Number 1. Trade. Countries that sell a lot of stuff to other countries often have stronger currencies. Number 2. Interest rates. Higher interest rates means more investors want their money to earn more interest and make more profit. Number 3. Stability. If your country is politically stable and there's not a constant protest, investors trust your currency more, so they buy more and the demand of your currency goes up. So yeah, there's no money dictator. It's just millions of traders, governments and businesses constantly voting on what each currency should be worth. But now the question is, why some currencies are stronger than others? Okay, let's understand it with a simple example. The British pound is more valuable than the US dollar. But the US dollar is still the king of currencies. Now you might think, how the hell is that possible? Well, strength doesn't always mean power. The British pound is worth about 1.25 US dollar. But does that make it the world's most important currency? Nope. Think of it like height. Just because someone is taller doesn't mean they are the most important person in the room. The US dollar is powerful because over 88% of global trade happens in dollars. Most countries keep their emergency money called foreign reserve in US dollars. Oil, gold, and even airline deals are priced in dollars. Meanwhile, some currencies are super strong in numbers but don't have much global influence. For example, dinar. One Kuwaiti dinar equals 3.25 US dollar. Sounds crazy, right? But Kuwait's economy is small. It's just that their currency is priced high because of oil exports and government policies. On the flip side, countries like Vietnam or Indonesia have currencies where $1 equals thousands of their units. That doesn't mean they are poor, it's just how they have structured their money. Now, the next question is, how history plays a role in currency value. Think of a country's currency like someone's reputation. If you have been reliable for years, people trust you. But if you have messed up badly, that story sticks and everyone remembers. For example, Germany once printed so much money that people needed a wheelbarrow of cash just to buy a bread. Seriously, the money was worth less than the paper it was printed on. Nobody trusted its value. After that, Germany learned its lesson. Never go on a money printing game again. On the other hand, after World War II, US was like a friend who suddenly owned the biggest factory, had the most gold, and was super stable. The world said, "Yep, we trust you." And in 1944, the US dollar became the main currency for global trade. So yeah, this story leaves an impact. If your country had bad debt or political chaos before, investors remember that, and your currency might still pay the price decades later. And now the last question. What makes a currency lose its value? Well, there's mainly three big reasons. Number 1. Printing too much money. If a country keeps making money without backing it up with real goods or services, value drops. This is why you should watch my video on what happens if we print more money. Link in the comment. Number 2. Losing investor trust. If investors think a country can't pay its debt and their investment might be at a risk, so as a result, they sell the currency fast. Number 3. Instability. Wars, disasters, continuous strikes. These scare investors away, lowering demand for your currency, and there goes currency value. For example, in 2018, Turkish lira lost about 40% of its value in 1 year. Why? Political tensions, high debt, which lead to distrust among the investors. So as a result, they pull their money out. Currencies are like dating. Once trust is gone, it's really hard to get it back. So, why do currencies have different values? Because money is not just paper or numbers on a screen. It's a reflection of trust, trade, history, and stability. If your country is trusted, productive, and stable, your currency will likely be stronger. If it's unstable, full of debt, or keeps printing money, good luck. If you found this video informative, you might want to watch this video where I explained what happens if we print more money. Comment down the name of the currency you use in your country so others can guess where you are from. And subscribe because why not? It's free. This is Decoding IQ. See you in the next one.